Hi, Jonathan York from Bay Financial Partners, looking at investment markets. A big couple of weeks coming up for the US. Now, obviously, we've still got the government shutdown, which potentially could be a good thing because certainly the data is potentially going to be pretty weak, certainly on the employment side. Also, as well, it looks like inflation is starting to nudge up a little bit. That's running just around sort of 3%, which is obviously well above the Fed's target of 2%. Although Trump and the administration still claim the US is the hottest economy. So the Fed meet next week and really expected to cut interest rates by 25 basis points. Stephen Merrin, the appointee by Trump, is still obviously calling for a much bigger cut and still feels that interest rates should be around 1 to 1.5% lower than the current levels. But interestingly, the recent Fed Beige book, indicated that tariffs are starting to push prices up, and I say, inflation in the US is running at around 3%. But again, Trump and the administration failed to acknowledge that fact and still claim that there's pretty much no inflation in the US economy. Now, what is quite interesting as well, we've seen further talk about the US government investing in US companies, which, it's sort of quite ironic, really, because it's looking more and more like a state-sponsored economy now. Now, Trump and the administration claim that this is all about national security. And certainly rates are nudging down in the US. The 10-year is below 4% at 3.95. The 2-year is 3.46. And the 30-year is hovering around 4.50. So potentially on those sort of rates, mortgage rates should start to nudge down because, again, the housing market has been pretty sort of stagnant in the last sort of 3 to 4 months. And that's really a further indication about the sort of weakness in the jobs market. Now, it is a big couple of weeks for earnings. You've got a lot of the big tech companies reporting. And, certainly the banks have reported some pretty reasonable results so far. And it's now going to be very interesting to see the big techs coming through. And not so much on their actual earnings, but also their guidance going forward as well. Now, interesting to note that China's latest GDP for the third quarter was still above 5% at 5.2. That's down 1/10 from 5.3 previously. But again, still pretty good numbers. Now, I'll see some pretty major rallies in the US over the weekend for the No Kings rally. And, that was really, again, indicative of the, lack of support for Trump and his administration. And it even looks like some of the MAGA supporters who actually voted him in are now starting to lose faith and sort of turn against him. Now, after the No Kings rally at the weekend in the US, it appears that Trump's polling numbers are falling even further. Now, obviously, the big news as well was the sort of Gaza ceasefire, but that really does look pretty tenuous at present, with both sides looking like they're breaching that at present. Now, potentially there is a further meeting between Trump and Putin to try and end the Russia-Ukraine war. But again, the skeptics are sort of saying, well, really, there's very little happened since the previous meeting in Alaska. And, they're really questioning whether Putin has any desire to end this conflict. There is even some talk that Trump is pressuring President Zelensky to accept lost ground to Russia in order to get a ceasefire agreed. Now oil is falling further here, 57.80 and change. That's well below $60 now. You know, potentially OPEC Plus now could be looking at some sort of restrictions on supply going forward to try and get that price up. Although obviously from a global perspective, you know, falling oil prices really does help the inflationary pressures. Now in the UK, still pretty tough times out there. Unemployment is rising, highest levels now since June 2021. And certainly Rachel Reeves has a really pretty tough budget coming up in November as she tries to balance, you know, potentially sort of tax increases and sort of spending cuts with a very weak economy. Because certainly the UK does need lower rates, but again, inflation is sort of nudging up almost month by month. Now in the EU, the French Prime Minister has come back and suspended the pension reforms that were trying to be pushed through. But will that be enough to sort of implement a little bit of political calmness in France? Now the big news in Australia is a deal between the US and Australia for minerals and rare earth minerals that potentially, you know, could sort of help the Australian economy. Also, as well, a further boost to the Australian economy will be that GDP number coming out of China, which, as sort of previously stated, was above 5%. And potentially still looking at a rate cut from the RBA before year end. Now here in New Zealand, the latest CPI data came out at 3%, which is right at the upper end of the Reserve Bank's targets. You know, their target range for CPI is 1 to 3%. But interestingly, at the last meeting, they did expect CPI to sort of fall over the next sort of 6 to 9 months, back to that sort of low twos. And given this slight increase was pretty much widely expected, still expect the Reserve Bank to cut interest rates by 25 basis points at its November meeting. That would then give the new governor, Anna Bremen, a pretty clean slate as she comes in on the 1st of December. And remember, the next meeting for the Reserve Bank is not until February 2026. So clearly we've got a pretty weak economy. Those interest rate cuts should start to sort of hit the economy, but will take, you know, maybe 3 to 6 months to sort of filter through. And obviously as we head into sort of Christmas and the holiday period, you know, it's vitally important to see money being spent in the economy. But interesting as well, we've seen a further increase in job ads for the New Zealand economy as well. So that all points to sort of further good news. And, you know, potentially with the sort of lower rates, housing market picking up, there is maybe, you know, still some further optimism coming through. But that really has to be translated into spending and, you know, an increase in growth. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.